Warren Buffett, famous investor, famously said, "Be fearful when others are greedy, and greedy when others are fearful." And what he means by that is when there's fear or dislike of a certain type of stock or category, like cruise line stocks, which have come way down ever since the beginning of the COVID pandemic, that might be a buying opportunity for others to buy in low, with the whole big idea of selling high later is the big idea around that. And if we think about cruise ships and cruise line stocks, there are some definite headwinds or some negatives around there. Still coming out of COVID. It's not like the early days of COVID, but still have COVID out there. There's certainly the Russian or Vladimir Putin's invasion of Ukraine is affecting all the markets. And I guess I'm not going to be going on my cruise to St. Petersburg, Russia anytime soon. There's certainly higher costs for the ships themselves from oil and gas and labor costs and inflation. Inflation that's higher prices on many goods and services, which means less disposable income for passengers to maybe book cruise ships because they're paying higher prices everywhere else. But there are some positives as well too. With the depressed prices of these cruise line stocks might be a good opportunity to get in low. People do have COVID fatigue, as in they want to get out and travel and they do want to cruise. And the wealthy folks still spend their money. They still have disposable income even with higher inflationary prices. And cruise lines tend to attract a wealthier client base. So we're going to look at those types of things and we're going to answer the question, should you invest in cruise line ship stocks now? And we're going to quickly evaluate two of the big players there as far as individual stocks. We're going to look at three key easy measures. Is the current price a good value? Can they pay their current debts? And is there an oversold situation, which is setting up a buying opportunity for us to maybe buy low and sell high? All that coming up on Investing Education with me, Mr. B. Welcome to the channel where we help you to learn fast so you can become a confident and successful investor. That sounds interesting to you? Check out the description below where I have links to the website and free courses and good comprehensive paid courses as well, all on sale. So check out the free and discounted courses on the website. Okay, so let's talk about cruise line stocks. And let's start by taking a quick look at where the industry is in comparison to the broader market. And then we're going to look at those two individual stocks to see if there might be an opportunity to buy. This chart here shows the broader market, like this is the S&P 500 index on the blue line, and then in the purple line is Norwegian Cruise Lines, and the reddish line is Carnival Cruise Lines. And if you go to the far left, you can see going back to January 1st of 2020, what happened, right, in early March, right? Everything went down because of the beginning of the COVID-19 pandemic. The broader market went down sharply, and cruise lines went down even further, much, much further. And then looking at this chart over from today, and you can see how they've both rebounded, but certainly the broader market over that period since January 2020 is up 32%, and cruise line stocks are still down about 64 and 69%, so there might be a buying opportunity there even still. They had a little rebound, but then they've come back down again. And if we look at year to date, just quickly look at the year to date numbers, you can see the broader market's down 10%, and cruise line stocks are down about 21, 23%, and though they're having a great day today as far as the day of this recording. So let's look at these two cruise line stocks quickly to kind of get a feel for what might be going on, and maybe they'd be of interest to you. So let's look, I'm just looking over here at Yahoo Finance, and I'm looking at Norwegian Cruise Line holdings here. We'll look at them first, then we'll look at Carnival. And you can see they're having a good day, up 10%. Yeah, good big day, right? So, but they still don't have earnings yet. They still have negative earnings per share. Things are still a struggle there as they come back online. But how is their price compared to their underlying assets as far as the value of the company? And that would be like a price to book value that we want to look at. And then we're going to look at two other measures here quickly as well for both. So we're going to go under statistics, and we're going to go down to price to book. Oops. We're going to go down to price to book right here. And you can see the current price to book is at 3.37 for Norwegian Cruise Line. Value investors like that number to be below 3.0 kind of at least. That shows something that's at a price where the stock price is a good value compared to their book value or their underlying assets and everything as far as the overall value of the company is a way to look at that. Ideally, if you can find something below 1.0, that means it's a tremendous opportunity where the price is really, really low in terms of stock price, and you can kind of buy in and get those assets for a very low price. And if you see it, Norwegian, historically, they've been down as low as 1.96, even possibly even lower than that. So But right now, 3.37, so not a true great value, but still a good value as far as that measure. There's a lot of measures, that's one of them. Let's look at their ability to pay their current debts, right? And with that, and their current obligations, we're gonna look at current ratio, which is your current assets divided by your current liabilities. And this is for the most recent quarter. And you want that number to be above 1.0. That means they are able to pay their current obligations, more short-term obligations versus looking at it from a long-term standpoint. You want this number to be above 1.0, that they're able to do that. And they're at 0.88, so still struggling a little bit with that, but as they come on more line and they start driving in some cash net income, hopefully that number will get back above 1.0. But it is a concerning number, something to be aware of. Now, they do have a good amount of cash in the bank, 1.75 billion, but also have a lot of long-term debt to try to stay alive, which is 13 billion that they took on early in the pandemic. Still, we'd like that number to be above 1.0. And now let's look to see if it's like an oversold situation where people are selling just so quickly and drove the price down so fast. Is there an opportunity to maybe buy in, and when things are oversold, you can buy in and it'll kind of have this more natural type rebound to a more static, more not static, but more realistic number than being everybody's just getting out, so it drives the price down real fast. We're looking for oversold. Now, there's a real easy measure to do that with, and we're going to go over here to, we're going to go to full screen, and we're going to look at the relative strength index, okay? So here is, I'm going to take a couple of these things off here. This is Norwegian that we're looking at right now. Let me take these two off. Okay, so we're going to use an indicator called the relative strength index, which is a measure of that. You can just go right under the indicators here. I'm going to go under RSI, or relative strength index. Usually, if it's an overbought situation, you're looking at 80 and above. This number would be 80 or above is overbought, and I'll show you how to read this number in a second. Oversold like 30 and below, but we have it set at 20 below to make it even more oversold. But those, you can either be 80, 20, 70, 30 is fine too, but the bigger the number, the more it's overbought, and the lower the number, the more it's oversold. So we're looking for something at least under 30. All right, so we'll save these parameters, and you find it at the bottom of the chart here, and you go to the far left, and you can see the current number. Because they're having a big day today, it's at a 41, so it's not in an oversold situation. If we look over time, there were times when it was oversold. Here we're back down in the 20, at like 36, or getting closer down here at like 21 or 22. That's more of an oversold situation. 41's not oversold, so not so much there with Norwegian Cruise Line. Let's take a look at Carnival Cruise Line. So Carnival also having a big day on this particular day of the video recording, up 10%, still really struggling with earnings. We're going to go look quickly at that price to book and current ratio. Their price to book is at 2.04, so a more attractive price to book than Norwegian. Below that 3.0, not below 1.0, but still an attractive number for many investors. You'd want to look at a lot of other numbers, do a lot more research. We're just quickly hitting some of the highlights. The second thing is their current ratio. Is it above 1.0? It's not. It's at 0.97 here in terms of the current ratio, but it's closer. Remember, Norwegian was at 0.88. These guys are at 0.97. So even though I actually prefer Norwegian as a cruise line, I've cruised on them and I like them, from a stock investor standpoint, so far Carnival's winning. Let's look at see if it's oversold, right? So we're going to go back in our summary. We're going to go to full screen on the chart here, over here. We're going to, now we have a Carnival Cruise Line here. We chose that. And we're going to look at this indicator, relative strength index, and we're looking for a number, below 20 would be ideal, maybe even below 30. And as we can see, they are at, let me close that one. They are at 34, right? So they are at 34. So lower than, which is good in terms of being maybe a more oversold situation, at 34 compared to Norwegian Cruise Line. So, but still not below our 30, or certainly not below our 20. So what does all this mean? Basically, cruise line stocks are still way down. There might be an opportunity, particularly if you're a longer term investor, to buy in now and look and hope for that price to appreciate as they come even more in line and we get through a lot of these different challenging times. Now, challenging times could continue to happen. We could have another COVID variant, things going poorly, or whatever might happen with the geopolitical environment. There's a lot more research to do. So I'm not recommending either one. You want to do your own research, but there's three ways that you can look at them quickly and say, is there an opportunity here or not? And there's a lot more things to look at, and I encourage you to do that. All right, so there you have it. Cruise line stocks, should you invest now? Maybe, maybe not. Particularly maybe for the long term, might be a positive thing, and it might be a lot on your outlook as far as what's going to happen in the broader market, and in particular with these individual stocks. So with this, I hope you like this video. If you want to check out other videos, do subscribe to the channel and check out the other videos as well. And check out the homepage, the Investing Education with Mr. B. Check out those free courses and other types of discounted courses. With that, I wish you all the best, and hopefully we can go cruising sometime soon, maybe where I want to go, the Baltic.